Welcome, everyone. Thank you for joining today's webinar. We will give it a minute to let everyone join. Good afternoon. My name is Kevin Olicle with NPNA, National Partnership for New Americans. I will be moderating today's webinar, PPP Loan Forgiveness, What Small Businesses and Nonprofits Need to Know. The presentation and recording of this webinar will be shared with all participants after we conclude today's program. This webinar has been made possible by the Cook County Recovery Initiative Program, launched by Cook County Board President Tony Preckwinkle to provide loan resources and technical assistance to Cook County businesses, independent contractors, and nonprofit organizations. Today's webinar will cover updated information on the Paycheck Protection Program, the loan forgiveness process with an emphasis on nonprofit guidance, and we will also have a Q&A section where our panel of subject matter experts will answer your questions. So to begin today's program, it is my pleasure to introduce you all to the Executive Director of National Partnership for New Americans, Nicole Malaku.
Thank you, Kevin. Good afternoon, everyone. Thank you for joining today's webinar. As Kevin mentioned, I'm Nicole Malaku, the Executive Director of NPNA. We are a national organization made up of 41 immigrant rights organizations across 37 states. Our members move local, state, and federal organizing and advocacy campaigns for immigrant rights while also providing essential services to our communities. During this difficult time, our members have been working hard around COVID-19 response and recovery efforts, including helping members enroll in the PPP and supporting immigrant small businesses to access and to be able to fully forgive PPP funds. NPNA is grateful to be a partner of the Cook County Recovery Initiative with organizations like the American Business Immigration Coalition, ABIC, the Illinois Restaurant Association, President Preckwinkle of Cook County, and Self-Help to ensure that payment protection program remains accessible to small businesses and nonprofit organizations in Cook County, Illinois. In a minute, we'll hear from Cook County Commissioner Bridget Gaynor. Through our work, we've been able to ensure more than $11 million of PPP funds to nonprofits and small businesses. For organizations and businesses that have yet to apply to PPP, we want to remind you that the deadline to apply is Saturday, August 8th, and that we are here to assist any group that has questions with the application process. We also will continue to advocate with our partners for continued federal support from Congress for small businesses and allocate funding specifically for minority-owned small businesses, which we know have been hardest hit. Today, we are going to focus on PPP forgiveness process, how to ensure 100% forgiveness on the PPP loans, and have ample time for questions and answers. Again, a special thank you to our partners at Self-Help, ABIC, and Cook County for helping us put on today's webinar. And now I'm proud to introduce our first speaker, Bridget Gaynor, Cook County Commissioner of the 10th District, who is a strong champion of supporting organizations, businesses, and our communities during this time. Elected to the Cook County Board in 2010, Commissioner Gaynor has been named a rising star in the Illinois politics and chairwoman of Pension Committee. She has led the charge of pension reform solutions that are fair to both taxpayers and workers. Also, Commissioner Gaynor created the Cook County Land Bank, the region's most comprehensive response to reduce the amount of impact of vacant land and abandoned buildings throughout Cook County. Thank you for your leadership and support, Commissioner Gaynor. It's my pleasure to welcome you today.
Well, thank you very much. I'm really happy to be here and, helping small businesses and the individuals that are employed there recover from the economic effects of COVID is one of the things that is most important to me. And hopefully we can all learn something today about what's happening. So I'm going to touch on three things, two of them briefly, and then do kind of a wrap up of what's happening with the Paycheck Protection Program loans, because that program can be a little bit confusing. So first I'm going to talk about the Cook County Recovery Initiative. It was a loan program that was set up for suburban businesses only. So applications are closed, but if you have not heard about it, it's because they're still under review. And so if you are interested in understanding the status, you can reach out to your commissioner, or I'll give my contacts at the end. You can call my office and we will help you understand if you were able to qualify for the program. But that was a loan program the president devised in order to reach out to small businesses in the county. The next is contact tracing. And as much as contact tracing is obviously very much to do with public health and stopping the spread of COVID, what I want to talk about today is the opportunity for people to become employed as contact tracers. So both nonprofits, there's an RFP out on the street right now that if you are a nonprofit that could be interested in, helping to run a cadre of contact tracers. But there's also an opportunity for individuals to register and then potentially be hired as a contact tracer. So the information is hopefully on the webinar, and that can be sent to people either through the chat function or elsewhere. But the application process is open right now, and hopefully people have the opportunity to, if they're interested in looking for employment, that they have the opportunity to potentially aid in the efforts around COVID. The last thing I'm going to talk about is the Paycheck Protection Program. So as you guys probably all know, it was a massive investment by the federal government, really meant to help small businesses survive. Some of the aspects of it, though, I think are a little bit confusing. There were several rounds of PPP funding. There were 3 rounds exactly, 1, 2, and 3. And you could participate in more than one round. But there was, strictures and requirements on how to get the funding. I'm sure many of you are aware as you were applicants. Most of it was to really take care of employee costs, to keep your staff employed, and then also for things that helped you recover or deal with the pandemic. So the good news is, first of all, they're still accepting payments until August 8th, which is just the end of this week, for the Paycheck Protection Program. So if you are a business that is interested in applying, please do so. And you can reach out to, I think, probably any member on the panel for more information. My office as well. So it was at one point that it was a very narrow time band, and 75% of the funds had to be used for payroll. They've expanded it to a 24-week period option. They lowered it to 60% of the proceeds for payroll, and they've also increased the flexibility of the program to allow for worker protection costs, masks, plexiglass shields, things like that. And there will be many other expenses that are allowed. Rent, utilities, things like that. But at the end of the day, by its name, Paycheck Protection, it was really to keep people receiving a paycheck during the pandemic. So if you have any questions on how to apply for the PPP program, on whether or not your business was started, you needed to be started by February 15th as a going concern in order to qualify, whether or not you incurred enough expense during the time period that they allow, any questions that you might have about, are you eligible? Is the loan truly going to be forgivable? What can you use it for? Please don't hesitate to reach out to my office, or I'm sure the moderator will give a series of contacts that you can reach out to answer your questions. So I think that that is, I think the important things about the PPP funding. The only thing I'll say at the end is, you may have read in the paper that Congress is considering another round of funding that would extend the $600 a week unemployment, additional unemployment benefit, as well as some additional paycheck protection for small businesses. That is still in negotiation in Congress. And so, we have to wait and see what they decide. Okay.
Thank you, Commissioner Gaynor, for taking the time to be a part of this webinar
Of course.
and all the work that you're doing through the county to support small businesses and nonprofits. And we'll be sure to spread the information about the coming programs.
Perfect. Thank you.
Next, we would like to introduce Laura Tafanetti, Assistant Director of the Rohingya Cultural Center. She will be speaking to her experience with the PPP program and how it has helped her organization.
Hi, our organization helps Rohingya refugees in all manners of ways, but the most important during now is helping them with casework, which means involving applying for unemployment and handling SNAP and things like that. Normally 50% of our budget comes from donations, but COVID killed that. And so we've really been scrambling, trying to pay the people that are helping our people. And Self-Help was kind enough to reach out to us, and they held my hand while we went through it. And I'm delighted that we have a little less to worry about, thanks to you guys.
Thank you so much, Laura, for speaking about your experience and with the PPP program and how Self-Help was able to help you guide you through that. Next, we would like to introduce Tracy Ward. Tracy is the Director of Self-Help's SBA 504 loan program and will be leading today's presentation on PPP loan forgiveness guidelines.
Good afternoon, everyone. I guess I want to just start by saying this presentation is based on the current forgiveness rules. SBA continues to update and clarify open questions. They provided more updated guidance just yesterday, and I'll cover some of those highlights as we go through today's presentation. But I think it's important to continue to stay current with the news and watch as it develops, but also I think part of that, Congress is currently considering additional changes to the Paycheck Protection Program. Some of those would extend the time potentially to apply or allow you to apply for a second PPP loan. There's the possibility of a separate grant program that would really try and help some of the businesses that have been the hardest hit, so businesses owned by people of color or businesses in low-income areas. And there's also the potential that Congress is considering that would be a much more streamlined forgiveness process than what the current process is. So a lot going on this week, especially in Congress, and we really encourage you. You are businesses, nonprofits that have received PPP loans. You're dealing with COVID. You're seeing what it takes to survive this and keep your staff employed and keep serving the communities that you work in. It's just really powerful when you reach out to your representatives and tell them your story and let them know the things about PPP that are helping and the things that could be improved. And we're really hopeful that Congress, they've so far made additional changes as time has gone on to really make this program a little more flexible and hopefully make it work better for you. So we really just encourage that. The time is right to really reach out now and give that kind of direct feedback as they're considering these changes. So I'm going to really quickly cover a lot of information today so that we can spend more time on a couple of the main issues and also save some time for Q&A at the end. But let's go ahead and dive in on slide 8 with just the current rules and tips, big picture, what's required for forgiveness. There are really 3 things that you need to focus on. One is that you use the funds strictly for eligible purposes. 2, that you use them during the required time period. And the third really big point is that you maintain staff. There are 2 separate determinations here. One has to do with staff wages and one with staff hours, essentially, their full-time equivalency. So we'll talk in more detail about each of those. On slide 9, let's start with what are some of the eligible payroll costs. So you can spend your PPP loan and request forgiveness for payroll costs. These are the same types of payroll costs that were considered to determine your PPP loan amount. A couple of clarifications that have come out in the past day or so from SBA is how healthcare benefits and retirement benefits are treated. So they really are focused on the typical tax treatment of those benefit payments. And so you'll see broken out here, if you are a C corporation, you file 1120, you have slightly different rules for healthcare and retirement, what can be included, than perhaps if you're a Schedule C filer. So we'll work through this, of course, as you go through the forgiveness application, but these are things that as you're working through it and trying to determine what types of costs are eligible, you're going to want to pay attention to. While SBA has not been explicit so far about nonprofits, our expectation is that nonprofits are treated like C Corps, which is the most flexible, the most amount of employer-paid health care and retirement could be included. Really important point to remember on payroll costs, you need to spend at least 60% of your PPP loan on payroll costs to be fully forgiven. I'm going to flip to the next slide, and a couple of additional points we want to talk about on payroll costs. We've gotten a lot of questions from businesses and nonprofits that because of COVID restrictions, you may be shut down right now, you may not have work for your employees. It's important to remember that you can pay your employees even if you don't have work for them right now. Part of the intent of the PPP program was to essentially let you continue paying your staff so that they are able to have an income during this period. So ideally, there's work that you have that they can perform for you, but even if there's not, you still need to hit that 60% towards payroll. So you can pay staff even if they're not working right now. Another question we've gotten a lot is, can you increase your staff's pay? Some of you need to pay hazard pay right now. You're asking your staff to do more hazardous work than they've had to do in the past. Or you may just have normal incentives, cost of living increases from 2019, and that's fine. For your employees, you are allowed to increase their pay. A couple of caveats. You can't pay any staff member more than $19.23 a week because there's a maximum of $100,000 a year annualized. Again, this is just for the cash compensation, so this doesn't include benefits, but you are limited to that per staff person. The other caveat is owner employees are not allowed to pay themselves any increase over their average 2019 pay. So if you are using the 8-week covered period, that maximum is $15,385, or the 24-week is $20,833. But that's also capped based on what you paid yourself in 2019. So if you paid yourself less than that for a 2.5-month period in 2019, you're going to be restricted to that lower amount. And just quick clarification, this really doesn't apply to nonprofits. Nonprofits don't have owners, and so you're really just limited to the $100,000 annual amount if you're thinking about increasing staff pay. So on slide 11, let's talk a little bit about what are the eligible non-payroll costs. And these are pretty limited and restricted as well. So for the 40% of your PPP loan that you can spend on non-payroll costs, you can use that money for interest payments on mortgages or other secured debt. So if you have a building that you're paying, that you have a mortgage on, or you have an equipment loan, you can use PPP funds for the interest portion of those payments. You can pay your organization's rent, or if you have equipment leases, you can pay those rent and lease payments with PPP. And the only other thing right now that you can include are business utility payments. These are pretty strictly defined as well. We're waiting on additional information to see if there's more flexibility in some of these items that are considered utility payments. But you'll see the list there. One thing that SBA did update yesterday to give a little bit more clarification has been around transportation utility payments. A lot of borrowers have asked us, does this include when we pay employee mileage for business travel? Unfortunately, it does not. This is strictly limited to transportation utility fees that are assessed by state or local governments. So it's a pretty narrow definition for transportation utility. I'm going to jump to slide 12. Just quickly, one way to help think about these non-payroll expenses that are permitted. In general, if it is the type of expense that you would put on your business tax return for one of these categories, then it's probably going to fit the definition. So that's kind of a good way for businesses, sole proprietorships to think about those costs. On slide 13, let's jump to, we know now what you can use the funds for. When do you have to use them? So SBA calls this your covered period. If your loan was approved prior to June 5th, you can choose an 8-week covered period, or you can choose a 24-week covered period. If your loan was approved after June 5th, you automatically have a 24-week covered period. One great point that SBA has clarified is even if you have the 24-week covered period, you don't have to wait the full 24 weeks. You can apply for forgiveness once you've used your loan funds. So if you finish using your PPP loan on week 18, you can apply at the end of week 18. So you have more flexibility. In most cases, we think the 24-week period is probably what most borrowers should and will choose. We think it just gives you more flexibility, but we'll talk through that a little bit more as we go. You also still have the option to use something SBA is calling an alternative payroll covered period. This basically lets you, if your payroll cycle is biweekly or more frequent, you can align your use of PPP funds to your payroll cycle. So in general, the day you receive your PPP loan funds is your day one of whatever your covered period is. If you have biweekly or more frequent payroll, and that starts maybe 5 days after you receive your loan, then that first date of that payroll cycle counts as your day one. That's just for your payroll. Everything else uses the normal time period, but it helps just align that so it makes it a little bit easier to keep track of. Slide 14, a little bit more on required time period. As we said, if your loan was approved before June 5th by SBA, you have the option of choosing an 8-week covered period. After June 5th, you have the 24-week period. Which should you choose? Again, in most cases, we think the 24-week period gives you more flexibility. But you're going to want to consider your situation. If you can't spend at least 60% of your loan on payroll costs and the rest on eligible non-payroll costs in 8 weeks, then choose the longer period. And again, once you have spent all of your PPP loan funds, you can apply even if it's the end of week 10. If you're the only employee, under current SBA rules, so this applies really to sole proprietors, independent contractors, you're not allowed to pay yourself at a faster rate than you did in 2019. So if you choose the 8-week period, you can't use your full loan to pay your own salary. If you choose the 24-week period and you are your only employee, you can use the whole loan to pay yourself. And that is really the quickest, easiest way for you to apply for forgiveness if you're an independent contractor or a sole proprietor with no other employees. Slide 15, a little bit more on this. The one or two times when it may be worth considering choosing the 8-week period if you have one of the loans that was approved before June 5th. If you've made more than a 25% reduction in any employee's average weekly wages, then that's really a dollar for dollar reduction from your forgiveness amount. So if you can't bring that salary back up so that it's less than a 25% reduction, then you may want to consider 8 weeks because your forgiveness will be reduced, their average weekly wage reduction over 25% per week for the full 8-week period or the full 24-week period. And that reduction will be counted over a full 24 weeks, even if you apply early, even if you're done and you apply at week 10. In this one instance, that type of reduction is going to reduce your forgiveness for the whole 24 weeks. So ideally, you don't have to reduce any staff members' wages by more than 25%. But if you do, that may be a time where you want to really think about whether the 8-week period might be a better option. If you can only maintain your full-time equivalent employees, so essentially employee hours, if you can only maintain that for 8 weeks, and once the 8 weeks is up, you no longer have the PPP funds to pay salaries, and you're not able to keep all of your employees on staff, there are lots of exceptions to the full-time equivalent reduction rule, so one of those exceptions may apply. If it doesn't, though, then maybe 8 weeks is the time period you want to use because that's the time period that you were able to keep everybody on staff. We're going to spend a lot more time talking about the full-time equivalent reductions because those exceptions are pretty broad, and we think most businesses and nonprofits should be able to fall within those, but still want to flag this as something you want to think about. On slide 16, still thinking through the required time period for using your funds. So if you pay your payroll costs or non-payroll costs during that covered period, that counts towards forgiveness. If you incurred your payroll costs or non-payroll costs during your covered period, that also counts for forgiveness. Even if the due date is after your covered period ends. So maybe you choose the 8-week covered period, you incur payroll costs, but your regular pay date for those payroll costs is not until week 9. You can pay it on its regular date, which is outside your covered period, and it would still count towards forgiveness. A couple of things to focus on here. Prepayments do not appear to be forgivable. SBA has been very clear that mortgage interest payments or secured debt interest payments cannot be prepaid. Healthcare payments, retirement payments cannot be prepaid. We expect the same treatment for any payroll cost or non-payroll cost. SBA has not been explicit about some of the other ones, but we believe they would treat them all the same way and not allow forgiveness for a prepayment before something is due. So for instance, if your covered period ends in October, you would not want to pay your December utilities. You would want to make sure you are paying things that are either due or incurred during your covered period. Slide 17. So we've talked about what you can use the funds for. We've talked about when you need to use the funds. Now I want to get into this area of maintaining staff. There are two distinct things to look at here. One is maintaining staff wages, and the other is maintaining your total full-time equivalent number of staff. And these really are two separate things to think about. So for staff wages, SBA has been clear that you're looking at average weekly wages of your staff. So if you have a salaried employee, if you've had to reduce their annual salary, you'll look at that on a per week basis to determine whether you've made more than a 25% reduction. If they're an hourly staff, you'll look at their hourly wages. So if you've reduced hourly wages from $20 an hour to $15 an hour, that's how you're going to determine, have I exceeded 25%? If you need to reduce staff wages up to 25%, that's fine, and that won't affect forgiveness. If you need to reduce staff wages for someone who made over $100,000 annualized, that also is fine. That's not going to count against you. SBA is looking at the wages of your staff that made $100,000 or less annualized. This also doesn't count against you if you have to reduce your own pay. If you are the business owner and you have to cut your own pay in order to survive this, that's not going to count against you on forgiveness. It is important to remember this is a dollar for dollar reduction of your forgiveness. So if you do have to reduce any employee's wages by more than 25%, you're going to calculate what that average weekly wage is, and then the portion over 25%, you're going to multiply by your full covered period of either 8 weeks or the full 24 weeks. And again, even if you apply early before the 24-week period is over, if you've reduced employee wages, that's going to be multiplied by 24. So this is one that we just really want to make people aware of and focus on. You may be able, if you've already had to reduce employee wages by more than 25% for any single employee, you can pay them an amount that would offset that reduction so that you are not more than 25%. Or if you're able to restore those wages on or before December 31st, obviously before you apply for forgiveness, because you'll need to be able to show you've done it. But that would eliminate this issue for you. In slide 18, so the other point to consider is maintaining staff full-time equivalent numbers. If you reduce your total average full-time equivalent number of employees, then that also can cause a reduction in your forgiveness amount. This includes all your employees, regardless of the amount they pay. So this is completely separate from thinking about how much you're paying them. This is just your staff total hours. This slide shows a couple of different ways that SBA is allowing you to calculate that. I won't really go through this in detail. I think you can work through those examples. But it's important to remember that no employee can count as more than one full-time equivalent. So even though you may have staff that are working 60 hours a week right now, you as a business owner or as the leader for your nonprofit are probably working more than 40 hours a week right now. That's still one full-time equivalent, one FTE. On slide 19, just as you think about full-time equivalents, you will compare a pre-COVID period that you choose to your covered period, or the time period that you use of your 24 weeks that you're using as the period to use your PPP funds. This lays out your options. What I would say is you may want to calculate your full-time equivalent numbers under each of these options to determine which pre-COVID period you had the lowest number of FTEs, which just makes it easier for you to show that during your covered period, you were able to maintain that same number of FTEs. One other question that's come up a lot on this, when you applied for your PPP loan, you also provided information about your number of employees. SBA recognizes because they were trying to hurry to get this loan program up and running, they did not give full guidance at the beginning, and they did not provide a definition of what they meant by FTE. They didn't tell you how to calculate it. So they're not going to hold you to that count. So whatever number of employees you put on your PPP application, you're not bound to. For the forgiveness application, they're requesting you do a new count. You go back to one of these periods that they're allowing you to choose from, and that's the number that you'll use so that you're really comparing apples to apples. You're counting the same way pre-COVID as they're requiring you to count for your covered period. On slide 20, I really want to spend a few minutes talking about the FTE reduction exceptions because we do feel like the exceptions have become broad and much more flexible. And if you have had to reduce your total number of employees, we think most of you, hopefully these exceptions will apply so that your forgiveness is not reduced for this. The main kind of most flexible exception is the first one on the list here on slide 20. If you are unable to operate at pre-COVID levels of business activity because you're complying with COVID-19 safety or sanitation or social distancing guidance, then you are not required to maintain the same number of full-time equivalent employees. Essentially, if you have not been able to open for business because of shutdown orders in your location or compliance with COVID-19 restrictions has required you to limit the number of customers that can come into your business. If you are a nonprofit and you have not been able to hold events that you would have held because you can't have that large of gatherings, these are the types of things that we believe would fall under this exception. And if you are relying on this exception, you're going to want to keep copies of the restrictions. So whatever the guidance was for your local area, if your state governor issued a shutdown order for businesses, or if you had guidance through your state on limiting the number of people that could gather at one time, guidance on the CDC website about the workplace, about large gatherings. You'll want to keep copies of those things so that you can show, yes, there was guidance that applied to my location, and this is, SBA has been clear that this is not just federal guidance. So the CDC guidance is great, and you should pull that down and keep it, but you can also rely on local guidance that was issued by your state governor or by your city or county. Keep a copy of it so you can show that impacted what you were able to do with your operations, that kept you from being at your normal level of operations. You're also going to want to keep a copy of your financials to show that this did have an impact. Either your revenues were lower, or maybe the expenses were higher because you had to buy PPE in order to comply with COVID restrictions. So you're going to want to keep both of those things to really make sure that you can fall into this, we think, pretty broad exception if you have had to reduce your full-time equivalent employee numbers. Other exceptions I won't spend a lot of time on, but you'll see the list. If you have, you may have had to fire an employee because they did something you can't permit. Employees could have voluntarily resigned. If you've had these types of issues, keep the documentation so that you can show that that's what happened. And again, those won't then reduce your forgiveness amount. And finally, as long as you either rehire or refill any open positions by December 31st, if none of the other exceptions apply, then that also would keep your forgiveness from being reduced. On slide 21, we want to just move a little bit to some tips on the forgiveness application. Again, Congress is considering a more streamlined forgiveness process that we are hopeful will pass, but right now there are 2 forgiveness applications, and if there are no changes, you will need to complete one of these. The EZ form is, as it says, much easier, and so that's the one that if you can possibly fit within, you're going to want to. So if you are a borrower that has no employees other than the owner, so sole proprietors, independent contractors, you may fall here. You can use the EZ form. If you have employees, but you haven't made any wage reductions over 25%, then you can use the EZ form if you haven't had FTE reductions. And again, there are a couple of exceptions there if you have. Or if you are a borrower with employees and no wage reductions over 25%, and you meet this broad exception of you just weren't able to operate at your normal levels because of COVID. So ideally, you can fall within one of those 3 categories and use the EZ form. A little bit on forgiveness application tips. If you're a borrower with no employees, you use the EZ form, you really do want to, or we think the easiest way for you to apply for forgiveness is to use your loan for your own payroll if you're the only employee. You would need to choose the 24-week period because you can't pay yourself 2.5 months worth of pay in just 8 weeks, but after 2.5 months from disbursement, you could apply. If you are a borrower with employees and you have wage reductions, we've tried to kind of lay out whether you could still use the EZ form. So if you jump on this list, Antonio was making $25 an hour. You had to cut Antonio's pay to $20 an hour, to 20% reduction. Not a problem. You can still use EZ. Vanessa made $110,000 last year. You've had to severely cut Vanessa's pay to get through this by 55%. But since she was making over $100,000, she doesn't count towards this determination, so you could still use the EZ. Lynn could be a problem. You've reduced Lynn's pay by 26%, so you wouldn't be able to use the EZ form, again, unless you are able to pay Lynn a supplement enough to get them back so that that pay reduction is less than 25%. And as long as you do that before the end of the year, you could still use the EZ form. On slide 24, this is looking at FTE reductions. Again, this is looking at all employees and the totals. This one, before COVID, you had 3.1 full-time equivalent employees. You do have a reduction. As your covered period, you have only 2.8. But in each case, you meet one of the exceptions. So you would still be able to use the EZ form. On slide 25, I want to talk a little bit about this issue has come up about possible double dipping and what that might mean for PPP. So the OMB, Office of Management and Budget, has issued guidance that really speaks to this. Part of that guidance gives awarding agencies, if you're a nonprofit or organization that has gotten federal funding, check with your awarding agency. One piece that might help you, they may allow you to continue to charge salaries to your grant. Another piece that could be more helpful if you're trying to compare that and use that with PPP is your awarding agency might allow other costs to be charged to your grant if they're necessary for you to resume activities that the award supports. One thing that they're clear on is that if you use another federal grant award to pay salaries, you may not claim those same salaries for that same time period for use of PPP funds to get forgiveness. So you just need to allocate. If you have other federal awards that you're using to pay payroll, you don't want to include those in your forgiveness request. And again, it's just if it's that same person, that same time period, so you may be able to, with 24 weeks, spread things out more, but you just want to watch that carefully so that you're not double dipping and claiming that payroll was covered by two different things. That's really what they're concerned about. Nonprofits may also have non-federal restricted funding, so private grants or foundation grants. Again, we recommend that you check with the funder to see if they'll give you more flexibility. They are supportive of your organization, and the best thing they could do right now for your organization to allow you to continue serving your community is to give you a little more flexibility, either on the time period or the use of funds if it's a restricted grant, so that you can use your PPP for payroll and other eligible things for PPP, so you can really maximize PPP forgiveness. The other topic I'll flag that is less for nonprofits, more for sole proprietors, independent contractors, is unemployment compensation. In working with a lot of self-employed or independent contractors, we know that you may have been able to get a larger weekly pay amount through unemployment, especially while this extra $600 was in place, than you would have gotten from PPP. And so a lot of owners made that choice that was the way to survive this crisis right now. The only thing you need to remember is you can't get unemployment benefits and use PPP for your payroll for the same time period. So for the weeks that you're drawing unemployment, you could not claim PPP forgiveness for your salary for those weeks. And again, with a 24-week period, we think you have some time and flexibility to make this work, but you just want to be careful that you're not claiming both in the same week. On slide 26, a couple of tips. Even if you didn't use your entire PPP loan for eligible purposes, you can still apply for forgiveness, get forgiven for as much as you can show was used under the rules and for eligible purposes. The balance will turn into a loan, and you'll repay your lender over that loan term at 1% interest. You have up to 10 months after the end of your covered period to apply. So again, your covered period can be up to 24 weeks. Maximum is the end of this year, and then 10 months from the end of your covered period, you just want to make sure you apply for forgiveness before that 10 months is over. Your loan remains deferred until your forgiveness determination is made, so you don't have to worry about start making payments on any unforgiven amount. And SBA has alerted lenders that they expect to start accepting forgiveness determinations mid-August. We're waiting to see. SBA has acknowledged that if Congress does make changes, that could delay that. But right now, we think the earliest that PPP borrowers will be able to start submitting their forgiveness applications is probably going to be mid to late August. So we'll keep you posted. Also want to say, check in with your lender. You do have to apply with the lender that you got the PPP loan from for forgiveness. So keep in touch with your lender to find out what their process is, because they could have different processes depending on the lender, but they should be able to let you know what to do. I won't go into detail on the slide 27, what SBA will review. I think you can read that, and I know we really want to get to some Q&A. So I will pause or stop here and let the Q&A portion start so we can get to any specific questions.
Thank you, Tracy, for the thorough presentation. Just want to let everybody that's participating know that we will be sharing the slides and the recording of the webinar once it's concluded. So we will move on to the Q&A section with our panel, which will include Tracy Ward and Larry Luster, the Special Projects Coordinator with the American Business Immigration Coalition. Larry, are you on the line?
Yeah, I'm here.
Okay, great, thank you. So we have a lot of questions to get through. A lot of people have submitted questions, so we'll start with this first question. Will go to you, Larry. I never heard back from my bank about my PPP application. Is it too late to apply now?
So currently it is not too late to apply. You have until August 8th. Right now at ABIC, we're working with a lender, Lendistry, and they've extended their deadline, or the last day that they'll take PPP applications is August 6th. So if you need help with your PPP loan or you haven't heard from your bank, feel free to give us a call. Reach out to us at ta@americanbic.biz. Again, that's ta@americanbic, B-I-C, americanbic.biz.
Thank you, Larry. This next question goes to Tracy. Who decides if a loan is forgiven, the lender or the SBA? When will the decision be made after the forgiveness application is submitted?
Good question. So under the current rules, the lender makes the initial determination. So you'll prepare the application and let the lender know the amount that you think is eligible for forgiveness. The lender is required to review your calculation and your supporting documentation, and then the lender submits the amount to SBA that it has determined is eligible for forgiveness. SBA also has the opportunity to review that, and they have the option of reviewing it before the final forgiveness determination is made, or they can go ahead and pay off the amount of your loan that is forgiven according to the lender's determination, and then SBA could subsequently, really over the next couple of years, review the loan and determine that either it wasn't eligible for forgiveness or not the total amount. If they do that, they would then reach back out to have you repay the portion that they disagree was forgivable. You would have an opportunity, of course, to work with them to document, to hopefully resolve that so that it was clear it was all forgiven. But the lender makes the initial determination, and then SBA separately really makes that final decision.
Thank you. So another question to Larry. Can we apply for another round of PPP loans since there are funds remaining and we only received enough money for 8 weeks instead of 24 weeks? The rules changed after our funds were dispersed. Can we apply for additional PPP funds?
So if you've applied once, you can't apply again. But what we've been doing is advocating with on behalf of small businesses with ABIC on the federal level, so that there's going to be there may be another round of PPP. But currently, if you've applied once, you cannot apply again. But we're working to get another round for businesses with fewer than 300 employees. They can reapply as long as they can demonstrate pandemic-related revenue loss of at least 35%. And there was a Republican amendment proposal that put the threshold at 50% to provide greater flexibility for other recipients of the PPP. So we're putting forth an effort for there to be another round of PPP for businesses. But if you applied once and received it, you can't apply again. Cannot.
Thank you. This is for Tracy. It's a nonprofit specific question. Is there guidance on double dipping, have salaries forgiven by PPP, but also using those same salaries in a cost reimbursement grant?
Yeah, and I think the guidance is that you should not do that. If you have other funds, reimbursement grants that are covering payroll costs, you should not ask for PPP forgiveness for that. If it's a federal award, it's very clear that you can't do that. If it's non-federal, so a foundation or a private funder, I think your auditors would probably take the same position. So that's just something you'd want to think through. But our advice is that you either use PPP funds for salaries or you use the other award for salaries, but not both for the same salary.
Thank you, Tracy. Larry, this is for you. A participant asked, they paid their staff with 1099s. Apparently, they were denied the PPP loan. Because of that, how can they resolve this matter?
Sure. So what those businesses do is they have the option of working with an accountant to reestablish the people that they paid as employees. What they would do, what those 1099 employees would do is they get a reassessment, and so that way you would be able to create the documentation like your 941 payroll tax. That way you could apply and receive that. Now, when you reclassify those employees, there could be a cost because now you would be responsible for like employee costs, unemployment insurance, et cetera, all those costs associated with having employees. So you'd have to make a determination with your accountant if that reassessment would help you, put you in a better situation to have more of a positive net increase, more so than losing money because you're paying a high amount of taxes.
Thank you, Larry. This is for Tracy, if I reduce payroll in the last month's covered, will that payroll be forgivable?
So you're going to look at the full covered period. And again, that's, if you choose the 24-week covered period, you can apply early. So if you've used all of your PPP funds by the end of week 12, then that 12-week period is what you'll look at. But it is for the average for the whole period. So if in the last month you reduced wages so much that it brought any employee's average weekly wages for the whole period was a reduction of more than 25%, then that is going to reduce your forgivable amount.
Okay, to Larry, I'm a sole proprietor and contractor with my travel agency, was impacted by COVID. My travel agency started in February of 2020. Do I qualify for PPP?
So as long as your travel agency started before February 15th of 2020 and you issued wages, then you would qualify for PPP.
Okay, to Tracy, is there a specific way that self-employed with no other employees and thus no payroll must use the PPP? Can one simply write oneself a check for the full amount or for full amount of the PPP minus utilities?
It's a good question about documentation. SBA has not been clear about the requirement here, and the way we look at it, SBA has been so clear about the maximum amount that a self-employed person can pay themselves that we don't see the need for you to write yourself a check if that's not something you would normally do for your own payroll. We think that amount, there's a formula that SBA is using. It is strictly based on your average pay from 2019, and you already documented that to get the loan. So we don't see any reason to create something out of the ordinary. If you normally write yourself a check for payroll, then yes, that canceled check is great and it's part of your documentation. But if you don't, we don't see the need for that. You do have the right, while we think it's the easiest for you to use the whole thing for your own payroll if you are your only employee, you can use up to 40% for utilities that are for your business or rent, the other non-payroll eligible uses. We just think the easiest thing is to use the whole thing for your payroll if you are a one-person business.
Okay, we are coming to the end of our time, so we have one more question. Larry, this is for you. What is the status of the Collins-Rubio amendment to not have to file forgiveness applications for PPP loans less than $150,000? Tracy, if you have anything to add as well.
So I've been following this amendment along with the other ones around PPP and other grants and on the federal side. And so right now on the federal side they're in recess right now. but there's been calls to come back sooner. But that part of the amendment is still in negotiations, along with a host of other things about the next installment of PPP. So they haven't yet come to a conclusion, but that's still part of the negotiation in the proposal.
And the only thing that I would add is, again, it is really impactful when your senators and your representatives hear from you directly. You're their constituent, you're in their community. If there are things about PPP or about keeping your organization or your business operating so that you can continue creating jobs and can continue to serve the community, now is the time to reach out and let them know directly what works, what doesn't work. The forgiveness application process is still very complicated, and if you're concerned about it, now is the time, while Congress is really working through, how to make this better. Now is the time to speak up.
Thank you, Larry and Tracy, for answering those questions. We know we weren't able to get to everyone's questions, but we have come to the end of our time for this webinar. We want to thank our panelists for taking the time to answer these questions. We want to reiterate our commitment and that of all our partner organizations to continue supporting small businesses and nonprofits during this time. So do not hesitate to reach out to us and contact us with any questions. Again, the presentation, the recording, and resources from this webinar will be shared with all participants. Thank you again to all the presenters and partners. We hope everyone has a good day.